Good evening, Ken Long from Tortoise Capital Management. I want to go over the structure of the weekend uh, bundle of reports and show you how to navigate through them. I'll do a series of videos on how to read each one of those reports. What you can see in Adobe when you open up the bookmarks, you'll see the name of each one of these different reports, and by flashing to it, you'll be able to get the report that you want and then navigate from there. There's 57 pages in it. And so this helps. As an example, the daily, you'll recognize this layout from the normal daily report. And I've already done the movie description of this one. So let's take a look at the strategic report now. August 22nd, themes for the week. Market is bull quiet. Global's better than the U.S. The U.S. is the weakest sector. Emerging markets, Latin America, are the strongest. I'm going to take a look at some intermediate term ideas here, or swing ideas. ETF postures, 100% invested, but the market is overbought on a short-term basis, so we're going to be very cautious about adding to positions or starting new positions here. Commodities are still lagging. The high volatility sell-off Monday, followed by 4 days of rebound, is what brought us to these new annual highs and a 10-day overbought condition. The cows of the Dow are still performing very, very well, so we like those. A couple new ETFs are being added to add further variety to the emerging market sectors. I've already described in a previous movie the market health check, but that's where this is in this report. Benchmarks, the usual. Regional report, 7 regions of the world market model. We're at 100% invested. Global better than SPY, mid caps better than smalls, better than large. U.S. is weakest, Latin American emerging markets are strongest. Excuse me. Only Latin America is exceptionally strong on this one, highlighted by the green. Everything is green on the 5% rate of return, 5-week rate of return, percent rate of return. That's what gets us to 100% invested. A little deeper look at the broad index extract of the world market model. This adds semiconductors in the bundle of commodities. Oil stands out as weak and been very volatile on a quality basis. Gold has been extraordinarily quiet in terms of volatility. Financials stand out to us on a strength basis. Utilities, staples, and energy, oddly enough, are weak. Energy is weak because of oil, but the utilities and the staples are the defensive sectors, and they've suffered compared to the rest of the indexes, I think, due to the growth. And we see that reflected. The defensive sectors around the world are suffering in comparison to the growth sectors. So this is a business cycle kind of a rebound. The world market model itself, business sectors, you can see finance dominating, energy and staples are weak both in the U.S. and in global. The dollar up is weakest, so there's some room for the dollar to gain. Europe is stronger than Asia, and Europe is better than the U.S., and the U.S. is better than Asia right now. India is really suffering, and so there's an opportunity perhaps there for a Max Payne kind of condition. Mexico is uber strong, whereas Canada is weak and Brazil is kind of in the middle. So that's of interest. In the crossover system, I really use this more for information and status than I do as an actionable trading system. But now you can see all the U.S. Indices are above their 200-day moving average. The defensive sectors in the S&P we've already seen in a previous report are not doing as well. Only treasuries are really suffering. They flight from quality, perhaps. The ETF top 30. These are based off of the average score in the ETF2 database. And this is the chart that's used to make decisions on the smart steps for the ETF2 system. And just a quick look, we can see small cap value, that is, Austria and Sweden, coal and insurance, Mexico and Brazil. We saw that Latin America connection before. Home construction and home builders here. Latin America showing up again. The strength in Europe is enough apparently to offset the weakness in Asia, and so global small caps are doing well. South Korea, South Africa from emerging markets, more emerging markets, financials once more. So you can see where the strength is. ETF liquidity, these are the top 25 ETFs by average daily dollar volume over the last 30 trading days. Those in green are also exceptionally volatile. So as short-term trading vehicles, we like small caps, financials, real estate, oil services in China, oil, gold miners, and regional banks. So that tells you, if you're looking for short-term basis, where you can find the juice. And so that's a quick look at the strategy report, the first tab on the weekend report bundle. The next thing we'll do is go through smart steps. We'll save that for a second movie. Thanks for your attention.